The US Federal Reserve has raised its interest rates for the first time in 3 years, signalling an aggressive turn against inflation. Joining me now, Evan Lucas, Chief Market Strategist at InvestSMART. So break it all down for us, Evan. What does this mean? What does it mean for the markets? What are the flow-on effects here? Sum it all up.
Yeah, so for the actual rate rise this morning, that was a done and dusted deal. So I don't think it's actually that you need to concentrate on. What you do need to concentrate on is that the board has signaled that it's basically going to raise rates every single meeting this year, which means there's a further 6 to come. They believe that the federal funds rate, which is their version of the cash rate, will be at 1.9% by December. So they actually have a range. They do it in the moment. It now sits at 1/4% and 1/2%. They move it up in that sort of notch. So the midpoint by the end of the year is 1.9. So that's 6 further rate hikes. That is significantly more aggressive than what they told us in December. And by that also, they expect another 3 next year. So it is now finally them accepting that transitory is not the correct term. It is actually inflation that is becoming a real impactor on global growth and also on US growth. It's an impactor on how price stability has actually changed in the US. So for us here in Australia, you've got to also remember that means that our funding costs for our banks will get more expensive because a lot of our banks do fund in the States.
Sorry, mate, I was just about to ask you. I mean, inflation in the US was considerably more than it is here. So you can't draw much of a comparison there, can you, when talking about flow-on effects?
You can't. Admittedly, they do highlight very clearly that the Ukrainian crisis is part of the whole issue around inflation. They do. The link maybe here also is that supply chains globally are part of the reason. And that is something that we're feeling as well. And the story now for us here in Australia to look at is the China story with their COVID zero policy. So for us, the probability of having interruptions and price movements is actually a China story from my perspective than anything else.
Hey, what's going on with so-called shrinkflation, Evan?
So, shrinkflation is certainly something I've been asked about over the last couple of weeks because we just talked about inflation. So inflation we are seeing very much at the bowser. I know that those of you that are watching see inflation at the bowser, absolutely, and that is prices going up. Shrinkflation is actually inflation by stealth. And why we're talking about it is that we know things like wheat, we know things like coffee are exploding in price. Shrinkflation is where the price actually doesn't change, but the product you're buying gets smaller. Now, it's been going on for decades, and the good one to always highlight is junk food. They're very good at doing this. But let's look at a bar of chocolate, for instance. Chocolate has gone from about 360 grams in about 2000 down to about 180 grams in 2020. But the price of that chocolate bar is about the same as it was over the last 20 years, which means that it's almost doubled in price if you want to look at it in terms of what that means, because you used to get 380 and now you're getting 180, but the price is the same. So that is shrinkflation, where the price doesn't change, but the product gets smaller. And that is basically a form of inflation. It means also why they do that is that psychologically, people always concentrate on price first. One of the biggest things about humans is that we have a thing called loss aversion, and loss aversion is a very, very core, basically bias that we have. So we always see price first, and therefore a way to get around price increases would be to actually make the product smaller. So the one to watch might be your daily coffee. That could go from being that big to being that big, but the price stays the same.
Yes, and you know what? I noticed this the other day, and it might just be because I'm a cheapskate, but I got a paddle pop, right? Yeah. And that thing was so small. It was so small, but it was about $2.50, I think. I remember when I might be showing my age here, but they were about 50 cents when I was a kid.
Yeah, or mine. Yeah, exactly. And that's exactly the good example. Things like ice creams. If you look also, I mean, McDonald's are a great example. McDonald's burgers have got smaller over the last 15 to 20 years. It's across the board. And so for what you need to look at is something like wheat prices and corn prices and grain prices are under real pressure because of the Ukrainian crisis. So those value packs could go from being a certain size down to a value pack that's actually 200, 300 grams less, but still killing it a value pack at the same price.
Interesting. Shrinkflation. There you go. Evan Lucas, good to chat as always.